So why invest? The whole point of investing is basically to have a way where you can make money while you sleep. This is the philosophy of one of my investment professors from school, where basically he taught us that in order to be successful in life, we need to figure out ways to make money while you sleep, not only while you work. And investing is one of the most efficient ways of achieving this, and the best thing is that everyone can do it. You don't necessarily need to spend a lot of time and energy in order to be successful at it. We all wake up in the morning, get ready, go to work, and spend a lot of time and energy to basically make our money. After you receive your paycheck, at this point you have two alternatives. Grab your paycheck and put it in your bank account, or invest this money. Putting your money in the bank account is not a bad idea per se. However, you have one big enemy that hurts you by having your money in your bank account, and this is inflation. To give you a very quick example about inflation, let's say you want to purchase a phone that costs $1,000, and next year that same phone will cost you $1,100. So now you have to spend more money to purchase the same item. This is in a case where you have a 10% inflation in a year. Realistically, usually you have less than this, but this is just so you can have an idea of how it can hurt you by having your money at your bank account. So the same $1,000 that you have at your bank account now basically is worth less than before. This is why you want to invest. It's basically to avoid the effects on inflation, and with investing you buy something, and this something is called an asset that you're expecting to go up in value in the future. And this is how you beat the inflation. And not only beat inflation, but actually make you money in the future. One of the best examples I can give you in how investing can help you make money is by using the example of purchasing a house. When you buy a house, you basically have two ways in where you can make money. One is by rental income. So basically, when you rent your house to someone, that individual will pay you every month for rent. This basically will convert into a monthly cash flow that you will be receiving. And also, the second way that you make money with a house is by capital gains. And this is basically where the house goes up in value. So let's say you purchase the house at $100,000. In a couple of years, that house is worth $150,000. If you end up selling it, you're gonna make the difference. Subtracting $150,000 minus $100,000, your profit is $50,000. There are many different asset classes in where you can basically invest and make money. You have stocks, index funds, bonds, real estate, cryptocurrencies, and many others. But for the purpose of this video, I'm going to mainly focus on stocks. Personally, I think that stocks is such a great way of investing and making money. And the best thing is that you can start with as low as $1. And let me tell you how can you make this happen. When you invest in a company and you purchase their stocks, you're actually purchasing ownership of that specific company. So let's say if you want to invest in Apple, you're actually becoming part owner of Apple. And if this is the first time you're investing, congratulations, now you own part of a company. So let's imagine a scenario where you own 10% of Apple stocks. You basically have the right of 10% of Apple's profit, and you get this both by dividends and capital gains. In the real world, regular people won't have the money to purchase 10% of Apple because it literally costs billions of dollars. However, you don't need this amount to become part owner of Apple. You can start with $1, $5, $10, $15, or any amount that you like. And this is the beauty of investing in stocks. So you can take advantage of this situation and actually invest low amounts of money in multiple companies. Let's say you want to invest $10 in Apple, then you want to invest $15 in Tesla, and lastly you invest $20 in Microsoft. Now you have the diversification of 3 different companies, and the total money that you spent was $45. So the reality of this is that you don't need a lot of money to make money when you invest in stocks. To invest, basically you have 2 different methods. You have passive investing, where basically your investment will track a current market, or you have active investing, where basically you have to pick individual stocks in order to invest this money. The downside of the active investing is that it requires a great deal of time, energy, and knowledge in order to do this efficiently. You need to be able to read financial statements, understand companies' business models, understand their leadership and their goals. And what makes it even harder is that you need to know when it's a good time to sell. Maybe a company is performing really well at the beginning, but it starts to perform really poorly in the future. And at this point, you need to make sure you're following this specific company and know when it's a good time to sell. For the average people, not everyone is going to have the time and motivation to go through all these steps to invest in a company where you're not guaranteed to make money out of it. But the great news is that there's one good solution to this issue where you actually can avoid all this effort and where you don't have to go through the hardships of knowing in which company to invest, when is the right time to sell, and all these different issues. Instead of doing this, you can actually invest in an index fund. An index fund is basically a group of stocks that follows or tracks a specific market index. The most popular index fund is the S&P 500, which is composed of the 500 biggest companies in the United States. Most of the value of the overall stock market is heavily influenced by the S&P 500. And historically, this index averages from 10 to 13% annually. Have you heard of the saying that you don't have to put all your eggs in one basket? Well, investing in an index fund is literally the best way of achieving this principle. Because when you invest in an S&P 500 index fund, you're literally buying into all of those 500 companies where you will be able to enjoy the upside of this diversification. So let's say if I invest $1,000 in the S&P 500, this money will basically be split over all the 500 companies depending on their weight. And what I mean by this, some companies have more weight than others in the same index. So for example, if you look at this table, Apple takes about 7% of the whole S&P 500, Microsoft 6%, Amazon 3%, and so on and so forth. As you can see, Apple is the company that takes up the most in the S&P 500, and different companies carry different weight, mainly because of their size. Even Warren Buffett, that is considered basically the greatest investor of all time, recommends if you have a surplus of cash, then you can use this money to invest in an index fund. He explained that this is basically the greatest way to make wealth. So one of his most popular quotes, he explains, by periodically investing in an index fund, for example, the know-nothing investor can actually outperform most investment professionals. Paradoxically, when dumb money acknowledges its limitations, it ceases to be dumb. It is widely known that most investment professionals actually does not outperform the S&P 500. And this is people that literally make a lot of money in order to achieve this. They constantly try to beat the S&P 500 by trying to move money into different companies, try to invest more heavily in other places. However, it is known that around 85 to 90% of the fund managers does not beat the S&P 500. It is not an easy task, and the best bet that you can do is actually just invest in the S&P 500 without having to go through the effort of researching, reading financial statements. You can put your money and basically let it grow. There are multiple brokers that you can use in order to invest in stocks. It is very easy, and some of them are Robinhood, Webull, Fidelity, TD Ameritrade, and many others. I recommend you to do your own research, look at the one that you like the most, and use it. 3 of the most popular index funds in which you can invest in the S&P 500 that you can find on the brokers that I mentioned are the SPDR S&P 500 Trust, Vanguard 500 Index Fund, and Fidelity 500 Index Fund. If you're investing in the S&P 500 and you want to avoid losing money, the best way is do not take your money out of the stock market. And why do I say this? Like I previously mentioned, the S&P 500 has averaged 10 to 13% annually. This means even though there has been really bad economic times where you see big drops in the stock market, over time, the S&P 500 keeps growing and keeps making money. As you can see in this graph, one of the most recent examples was the COVID-19 pandemic in 2020, where you can see the S&P 500 had a huge drop around March 2020, and slowly over time you start to see the recovery of this index. So if you started investing in September 7th of 2018, despite all the ups and downs that you see on the S&P 500, by September 1st of 2023, you would have made roughly 57% out of your investment. So that example right there can show you how powerful is the S&P 500 and why it's such a good idea investing in this market. And if you want to take advantage of the S&P 500 even more, personally, when I see big drops in price, for me, I think of this as a discount, and I try to take advantage of this situation so I can put more money into the S&P 500 and actually own more shares of it, since the price is lower now, and then take advantage of the upside. You don't have to try to time the market and only purchasing the stocks when prices are low and selling when prices are high, because timing the market is an unrealistic approach. Instead, what you can do, just keep consistently investing money in the S&P 500 even if prices are low or prices are high. You can take advantage of the dollar cost average, and this is how you can maximize your return. So, as you have seen in this video, investing is virtually the most efficient way to make money while you sleep. And why I say it's the most efficient? Because you don't need to be an expert in order to make money in the stock market. You can just passively invest in an index fund such as the S&P 500, consistently invest money in it over time. I usually do on a monthly basis, and you can just relax and see your money grow. My recommendation for you will be just to start early so you can take advantage of compound interest. So where basically you're making interest out of your interest, and where basically time will help your money grow exponentially. And as you can see in this example, investor 1 starts at 25 years old and investor 2 starts at 35 years old. Only 10 years of difference investing the same money, and you see with compounding interest the huge difference that investor 1 had compared to investor 2. Compounding takes time, so this is why investing early is very important. So to start investing, my recommendation will be start passively invest, and if you want to actively invest into individual stocks, I recommend you to take this very seriously and take the time to learn about financial statements, about different business models, leadership, and all the different aspects of knowledge that are required in order to efficiently invest in individual companies. This is not easy to do, it is fun, and you can profit a lot from it if you do it right. But in order to minimize losses and not put in a lot of effort, passive investing in an index fund is the best way to do it. I really hope you liked my video. If you did, please subscribe to my channel, hit the thumbs up. This will greatly help my channel. Please feel free to leave any comments, and I really hope to see you soon.